time. Let's start here.
And what we're going to talk about today, guys, is we're going to talk about, we just had the US election, and it just ended a little while ago. A new president has been declared. So we want to examine how exactly do Republicans and Democrats fare in the next 4 years, right? So again, this is all about odds and probabilities. So you want to say, okay, well, now that we have a new president, not an incumbent, and we have a Republican, how has the market done historically? Now, the one thing we will have to say about this, which is unusual, is that Donald Trump, love him or hate him, he's not your usual Republican. He's not your father's Republican. He's a different type of character altogether. And one of the things he prided himself on in the last presidential period that he had was the performance of the stock market. So I think this is something that he's really going to focus on. But regardless, let's take a look at historical performance. How's it done? So between 1928 and 2020, 24 elections took place. Democrats won 13, Republicans won 11 of those. Okay. And anecdotally, most often you assume that the market performs better under a Republican administration. That's what the assumption is. That's what the popular thought process is. However, we're going to take a look at what the actual numbers dictate. Stock market performance has historically been stronger over every period from 6 months onwards under the Democratic administration. So let's take a look, Matthew. Okay, so this is months, and obviously we know it's 4-year terms. When you get elected, they're 4-year terms, so you have 48 years, okay? Now, the good thing to take note is after the end of the 40 years, markets have done well regardless of who's in charge, okay? But as you can see here, markets have performed better, surprisingly, under the Democrats than it has under the Republicans. But this is where the real big caveat comes in, I think, here. We don't know yet because Donald Trump is not your typical Republican. He is a very different type of character. And if you look at all the things that he's trying to implement, like the Department of Governmental Efficiency, dismantling the CIA, the FBI, and it's not gonna be something we've maybe seen before. But one thing, like I said, he has done in the past is he's always promoted the stock market and always taken a lot of pride on how the market did under his administration. So let's take a look at after about 4 years, you can see the average return, regardless of who's president. That's a cumulative return on the S&P 500 of 54.5%. The Democrats got 72.4% return, and the Republicans only managed 33% return. Now, again, every period has been positive, right? If you take an average of each president, okay, the 13 Democrats, 11 Republicans. So the markets have done well, but they've done better under the Democrats than they have under the Republicans, and that's something that we're going to have to take note of. But the wild card is Donald Trump. Any comments to add here, David?
Well, the other thing that people should remember, the Republicans who always complain about the profligacy of the Democrats, if you take a look at the budget deficits under Democrats and Republicans, you'll find that the Republicans are the greatest spenders in the history of humanity. They outspend Democratic administrations by the bucket.
Yeah, you would
think
I
know that for a fact.
Yeah, the traditional thought process is the Republicans are more fiscally responsible. They don't small government with debt, but the exact opposite holds true. I agree with you.
And this is a hallmark of what we're going to see in the, you're going to see this play out again. There is no question that if Donald Trump actually implements half of what he's rambled on about to get elected, we're going to have some great deficits. I'm not going to say more because I know we're going to come back to this because there's some implications here.
Yeah, and having big deficits when you already have a federal debt of 35 trillion, that's why something like the Department of Governmental Efficiency has been set up. They have to find ways to cut costs here. It's out of control. Well, David, how do you think Donald Trump, being not your typical Republican, how do you think the stock market will fare under his presidency over the next 4 years?
Well, very well. Because
I think so too.
if he is successful in deregulating, we're going to have a ton of economic activity. We're going to have extraordinary wealth created. We're going to have lots of people make money. We're also going to have more poor than we've ever had in the States. There are going to be
More, what was that, David? Sorry, you cut out there for a
we're going to
second.
have a lot more poor.
Oh, poor, yeah,
They're going
I
to be
agree.
a winner or a loser. And if he is successful in what he's seeking to do, then he has the political means to do so. And the people that he is rounding up to head the various secretaries of the various cabinet, these are completely and utterly consistent with his desire to make sure that it happens the way that he wants it to happen. So we have a few wild cards relating to deficits. But again, we can come back to that. But I have no doubt that it's going to be expansionary. He'll get reined in a little bit on his desire to do as much tax cutting as he would like. There are, because at the end of the day, the House of Representatives controls the purse in the Congress. The Republicans are going to have control of the House by about a couple of seats, depending upon the resolution of the last couple of constituents. That being said, just because he's Trump doesn't mean that they're going to vote en masse along his way. There are some fiscally conservative Republicans who will rein him in. And ultimately, no matter what Trump says, budgets still have to be, or excess budgets have to be approved by the House. And with 2 votes, 2 to 3 vote majority, all it takes is just a few defections. So it's not a done deal that he'll get all the spending cuts that he wants. For sure, you're going to get a lot of them.
Yeah, I would agree. He's going to get a lot of spending cuts that he wants. And you're right. You know, when you're only a majority of 2 or 3 extra votes, you could have a couple defections, which could change things. But I agree with you, David. I think over the next 4 years, and Matthew and I were talking about this, the stock market has a very good chance of doing quite well. Like, it could be a record run for the market. We'll see. And I think a couple things play into this: the increased productivity that comes out of AI, because we're at the stage right now where it's going to become more and more real. And the second thing would be, you know, obviously having Trump there, who is going to, I remember the last presidency, he kept talking on and on and on about how the stock market did, how much people make more money. He's going to implement tax cuts for wealthy and for businesses. And that's also going to spur the market on. But I agree with you as well, David. It's going to create a further divide between rich and poor. So all elections going back, you know, Republican, Democrat, the markets have done well. This might be a time where it does quite well. Now, let's take a look at the S&P 500 when compared to an incumbent president versus a new president. So incumbent, obviously he's not, because he lost the last election. He's a new president, okay? So now let's take a look at how incumbent presidents did versus new presidents. New presidents, the line in blue, outperformed incumbent presidents.
Now that makes sense for him. And like, as a Republican running, he was an incumbent, he was a new president in the prior election he won.
Yep.
And he is the new president in this election. So this does make sense. I would like to say, though, and maybe David, you can opine here, is that this is just one input as a piece of statistics here. I think you have to also weigh, like, hey, what's the nature of the global economy? What's the nature of the American economy? You know, what issues are prevalent during this time? Like, there's a lot of other things to take into account, but obviously the evidence is like, hey, Democrat outperforms a Republican over the long term, but new outperforms old. And maybe the new outperforming the old is a sense of like exuberance. Say, okay, there's a new guy in, you know, it's gung-ho on the markets now, right? Maybe that's the case, but again, I think it is also, we have to take that slice of history and figure out, you know, what we're going to do with that data, because I think every little slice of history is a little bit different.
So let's take a look at that 4-year number, right? The 4-year number when a new president is elected, 62.2% versus the incumbent at 43.4%. So that bodes well for this presidency and this administration. So again, I really believe that the next 4 years are going to be very solid for stock market performance because of who is in power and because of how much the stock market matters to him. For him, it's like, this is the gauge. So we could be in for 4 very, very good years. Now, they might not be a straight line, of course, that never is. But in the end of the 4 years, we might come out doing quite well. Okay, so let's take a look at tax policies. That's going to be a big focus. You're going to get tax cuts on the wealthy and businesses. He's already talked about lowering taxes, including corporate taxes. Tax collections could raise new federal budget deficit concerns and may potentially drive bond yields higher. That could happen. So it isn't clear how the Republicans would address deficit concerns. However, there may be possibly additional tariffs. He's talked over and over and again about tariffs and implementing tariffs. One idea that he had was getting rid of tax altogether. So no more income tax. Okay?
Increasing. I think that's more pie in the sky.
I think that's pie in the sky too.
Yeah,
So
yeah.
getting rid of income tax and only having a tariff, and that would be enough revenue to support your government. But the reality is, you know, when you have a $35 trillion debt like the Americans do, your interest payments alone on that are like over $1 trillion. They spend more on the interest payments on this than they do on their next highest spend, which is their military, which is almost to that $1 trillion as well. So they have a couple things. One, they can let this debt accumulate and grow and grow and grow and grow. And eventually, the proverbial, you know what's going to hit the fan. It's going to get really bad. At some point, it's out of control. You can't do anything about it. You'll have rampant runaway inflation, and you'll have to keep printing more and more money to pay down this debt. That's one choice. And that day will come if something isn't done about it. Or they can start to get more efficient, and they can start to lower. And this is where that, you know, Department of Governmental Efficiency comes in. Elon Musk and Vivek Ramaswamy are running that department. I wish Elon wasn't this involved, but for a Tesla shareholder, you know, backing the winning horse like Elon did is going to have is going to pay some dividends, and that will be in the form of, you know, getting full self-driving launched a little quicker. But getting back to this deficit concern, David, how do you see this going? 35 trillion and only increasing rapidly. You know, 1 trillion a quarter now. At what point does it get out of hand, and how do they get out of this mess?
So, as I said earlier, because he has just marginal control over the House, it won't take much to get a few Republican House representatives to kind of rein in some of the excesses and basically say, no, if you're going to crank up some tax rate reductions, show me where you're going to make up the savings. And so, yes, you know, they're going to try and look at efficiencies, but, you know, some of the efficiencies are self-defeating because, okay, if you don't spend as much, you've created more unemployment, which triggers more program because you've laid off all kinds of people. Like maybe Canada should lay off the postal service because they're pretty useless and obsolete. So what if they go through the same type of analysis in certain departments down in the States? Yes, that'll free up people go on unemployment, which actually triggers some program spending automatic. I guess the most interesting thing is there's a lot of talk about tariffs, and you know, tariffs used recklessly are just that. They're just reckless fiscal tools that will create havoc all over the world. If, on the other hand, they're used surgically, which is the buzzword, they can be quite interesting and stimulative to economic activity. So Howard Lutnick, who's he's been designated as the tariff czar. Howard Lutnick is an extraordinarily smart and successful business person. He ran Cantor Fitzgerald. The story of Cantor Fitzgerald, they're one of the preeminent Wall Street securities firm. 3/4 of the firm was wiped out in 9/11. He just happened not to be in the office that day. His brother was. He died. So he's had to rebuild the firm on numerous occasions. And he's, you know, a billionaire. He is not an idiot. He is very reasonable and rational. And what I see is, with him being the tariff czar, is basically applying surgical tariffs or across the board. And that may create and stimulate economic activity, which will bring you back on side. So for example, the U.S. Trade Department publishes a report every year profiling every country about what they are kind of ticked off at. They just published, I saw the one for 2024. Canada's there's like 3 pages allocated to Canada. No surprise, digital taxes, the fact that Meta and all these other people want to have Canadian contact, they have to pay taxes. The Americans don't like it, or the US Trade Department does not like it. They do not like our dairy industry, because we pay 2 to 3 times world prices for all dairy products because we're protecting a couple hundred, sorry, maybe 1,000 dairy farmers, and somehow the Americans have decided they're going to bust that, and they'll do that because they can, and that's where you apply a surgical tariff. The other thing that they don't like are the marketing boards in some of the other areas. They don't like the alcohol boards and the restrictions, and they also don't like some of our privacy laws. So if the Howard Lutnicks of the world have their way, they will turn around and basically say, as long as you maintain your marketing and your agricultural barriers to entry, like in dairy products, etc., stuff like that, so that people from Michigan and Wisconsin can't participate, so you can protect your 1,500 farmers, and it's literally probably that many farmers. We're going to wipe out your aluminum industry and your steel industry with a 20% tariff. And that's what's going to happen if Howard Lutnick has his way. And what that means, and I don't see any reason why he's not going to have his way, because you got to realize that the Americans have set the dial for full bore at the rest of the world's expense. And if the people are given the opportunity and they've got the political means to approve and implement all of these policies, then what this really means is they could create a series of economic policies and tariff wars to basically blast their way in and take down and create economic growth for the Americans. Now, what offsets it? Hey, if you round up 2 million people who are involved in agriculture picking and stuff like that, and ship them out of the country because you believe they're all illegals, well, that's going to create a problem too. So you can't do both. And that's going to be that. I just don't know where they're going to fall in that spectrum. Thanks.
Yeah, I think that, David, every industry here is pretty much an oligopoly: banking, telecom, dairy, grocery, you name it. Everything's asset management. It's very difficult, barriers of entry wise, to enter, and that's why we pay the highest prices in the world. So I would be totally up for this. I hope a lot of these industries are broken up. There's no reason for us to be paying 2-3 times the dairy prices that everyone else pays around the world. It's ridiculous.
Well, let's face it, our cellular rates, by every international study I've seen,
Brutal.
Amongst the absolute highest in the world.
Yeah, so it'll be nice if that does happen. It'll be great for the Canadian consumer. And I think with if you get a conservative leadership up here, which more than likely you probably will, and you have Republican in the States, expect a lot of deregulation. I completely agree with you. So getting back,
don't know if we're going to go deregulation here. That's so foreign, even to the conservatives historically here. But again, if they are successful in applying surgical tariffs, they will go after the telecom industry. They're going to go after the agricultural product marketing.
Airlines, another one.
Nope, they're not going to worry about that. Everyone's got regional things. You got a problem. Every country or major countries have their national car producers, etc. Nope, they're going to target. They've already. All you have to do is take that book that the federal U.S. Department of U.S. Trade puts out. That's what they're targeting: digital assets, marketing boards, all of that stuff. They're going to have fun. Potentially,
it'll be good for us as Canadians. So just getting back to this, expect lower corporate taxes, expect tax cuts on the wealthy, And that will be a driver of the stock market. Remember, at the end of the day, what drives the stock price higher or lower is the amount of money that company makes or doesn't make. That's long term. Short term, anything can happen. If all of a sudden that corporation, let's say Apple, is paying less taxes, what does that mean? That means they have more earnings at the end of the day. And if they have more earnings at the end of the day, that boosts their earnings per share, and therefore it should be a boost to the stock. And that's the idea here, right? So other things to consider is, deregulation in corporate America. I think that's going to happen. U.S. trade policy, that's going to be the big wild card. How many tariffs on which countries? We're definitely getting some tariffs here in Canada, 100%. They're going to be like, well, why you can't dump your lumber here or your steel here and not allow us to compete in your dairy industry? And they got a point, right? We have to make a more competitive environment. You'll have geopolitical issues, particularly with China, and that could be proved to be a bit of an issue. So you will have tariffs on China, but the problem with that is it just makes, if you're importing a lot of stuff from China, and all of a sudden now that stuff costs more to input, you might get a little bit of rise in cost of goods and thus inflation. So spending priorities, energy, infrastructure, and defense. And let's take a look at our holdings right now. We're a little bit heavy on Microsoft, and we're a little bit heavy on Eli Lilly, but we'll probably reduce those as things come up. We've had a bit of a run in Bitcoin, so that's been very nice. And so we're pretty much just long. Why? Because from October to May, the stock market generally does well. So most of the assets are allocated. We have lots of written puts, 14%, 85.5%, 85.4% of the portfolio is long. So there's not a lot of cash. There is new cash coming in, which allows us to keep buying and buying and buying. But we're almost fully invested, and we're looking to make up some pretty good ground as the market goes up here. We're looking to generate some pretty good return, and we've had a good year so far, considering we just launched this year, and we didn't have a lot of assets at the start of the year. But now that we've got a lot of assets in the door and things continue to grow, it's been very nice. But essentially, we are long, right? We own stocks, so if Tesla goes up, Bitcoin goes up, Nvidia, whatever it may be, we'll do quite well. And we think under this Trump administration, that's a high likelihood. Okay. Obviously, we talk about this every time. There's a fund code, management, all that good stuff. Get a hold of us if you like. So what's to look forward to in December? December is considered generally one of the best months of the stock market, okay? So from 1950 to 2022, the S&P produced an average gain of 1.4% and was positive 74% of the time. Now we're expecting rate cuts both in Canada and the US. In Canada, in the next meeting of the Bank of Canada, December 8th, more than likely a 50 basis point cut. In the United States, again, more interest rate cuts, which should spur the economy on. So everything is pointing to maybe a pretty good performance. New president, a very business-friendly president. Seasonality is in our favor. This is why we are long our investments right now. If you want to get a hold of any of us, myself, Matthew, or David, please do so at these email addresses, contact numbers. We'd be happy to speak to you about whatever you like. And that's it, guys. Thank you so much for joining us. Any final comments, guys?
No, I think this is it's been so far a good year. Heading into December now, it's just literally right around the corner. The other thing is, like, don't be surprised if you see some tax loss selling potentially into the end of the year. Don't be surprised if you see like some volumes trail off in the last 2 weeks of the year. Obviously it's a stock market, so that known as a crystal ball, you could have some profit taking, right? Nvidia released earnings just this evening after the bell. We'll see how, and they beat, I believe.
Yeah, they beat. They had 81 cents versus 75 on the forecast. They beat on revenue, they beat on earnings, but the expectations were so lofty.
And you'll see if the market decides to pull back a little bit because, hey, listen, we were expecting like A++, and we only got A+. Okay, well maybe that's that's time for a little bit of a pullback. A pullback in these markets is not necessarily a bad thing. It gives time, gives people the time to kind of reset, get into other positions, rebalance, etc., etc. Because things have certainly gone sky high as of late, right? It's been pretty bullish of a market. And I would not be surprised if there's a little bit of a reset into the latter part of the year. But again, no one has the crystal ball, but you kind of see different things merging from different directions, right? And that's all I have from my end. David, how about you?
No, it's, very little is going to happen after US Thanksgiving.
Yep.
There'll be bounces here and there in response to different economic pieces of news. There's always the risk of some geopolitical event occurring that kind of scares or intimidates everyone. But I think the general consensus in the marketplace, at least by investors, is that notwithstanding the rhetoric, saner behavior will be practiced by all.
Thank you, David. Yeah, guys, buckle up. It's going to be very interesting 4 years. We'll see you guys next 2 weeks. Thank you guys for attending, and we'll talk soon.